Good morning, everyone. Welcome to the flow show. Now, I can't get my words out today. Must be Friday. I hope you're all doing well. Day after the ECB and Madame Lagarde. Good morning, K-Man. Happy it's the end of the week.
Good morning, Ryan. Good morning, everybody. Yes, I am very happy indeed. Thank you.
The clock seems to be running faster and faster. Oh, I don't know. It's like running downhill when you get this old. And yeah, days are flying by. Right, lots to be discussed, lots to go over, lots of moves happening. So let's get stuck into it. Going to start in Japan. Some very soft CPI data overnight, going the way that Ueda has told us, but still not good to see. Let's see if it's all up there. Of course, it's not all up there. I don't know why they don't put. Oh, there it is, right there. CPI coming down to. Oh, now I need to shut my squawk off. Right, let's start again. CPI coming off quite significantly in some of the numbers. CPI headline. This is all the Tokyo numbers, by the way. So this is before we get the main CPI numbers. 2.2% from 2.7%. Core, one of the cores, 1.6% lower than the expected 1.9%, and prior 2.1%. Another one, 1.6% versus 2.4% prior. So two of those measures below the Bank of Japan target. There is another core measure, which is the ex-fresh food and energy, which came in at 3.1%, was expected at 3.4% from a prior 3.5%. So that one is still above the target, and that's one of the main ones that the BOJ look at. But otherwise, Ueda told us that the inflation would be coming down in the latter part of the fiscal year 2023, which is a few months left, and that seems to be happening. Not a huge move, though, in yen pairs, as you might have expected on such dovish-looking news. Kay, why was that?
I guess the Bank of Japan minutes confirming that they were talking and wanting to talk about getting out of negative territory. And again, Ueda has told us that he was expecting this. So it should not completely change much. That's what I would think. Yeah. And yeah, so it's got to be countered by those Bank of Japan minutes. And yeah, I think the market is the yen market is a bit how shall I say, wondering what to do. And again, we might not have moved that much on the dollar yen, but then where yen pairs were looking a bit more vulnerable or so, they are coming back all the time, right? If you look at stuff like, yeah, you see that jump in the euro yen despite ECB and weaker numbers, see the sterling yen. And they're all showing that same thing. So perhaps next time we will see about the dollar, where the people are a little bit. So I think all in all it doesn't change much because Ueda already told us, and yet he continued to talk about getting out of the negative territory, and I reckon that's why yen is a bit listless, shall we say? Yet, yeah. Finding sellers on rallies still, if you look at those crosses, right?
Yeah, very much so. And those BOJ minutes, they were for the December meeting, not for last week's meeting, this week's meeting. Some, I'll go through the lines. Some members said it's not too late. It wouldn't be too late to make a decision post the spring wages, i.e. waiting for all those wages to drop in. It wouldn't be too late to then make a decision, rather than maybe going when we get all the announcements of the wages. Many members still need to see confirmation of a positive wage inflation cycle in order to consider ending negative interest rates and the YCC, though some members do see a risk of falling behind the curve. Some said it was vital to deepen talks on an exit timing and the right pace of rate hikes, and the likelihood of sustainably achieving the 2% inflation target was gradually heightening. So, as Kay said, a bit of a brush off of that data. The data doesn't really matter because the forecast is still for inflation to be higher and for all those wage increases to potentially shift the needle a little bit for policy and obviously for the economy as well. Kishida's virtuous growth cycle that he's looking for in that. So that's why, again, why we likely didn't get a big reaction in yen pairs. But those minutes from the December meeting, not the January meeting, but still sounding fairly hawkish in the meanwhile, or on the path, maintaining the path, shall we say. The president of Rengo, one of the biggest, or if not the biggest trade union, says he wants to aim for a new era in society where the economy, wages and prices are all growing. But he said that passing on labour costs is more difficult than raw material costs among small firms. So talking about how it's not necessarily easy to raise wages as it is if input prices are going up. So the ball is still rolling regarding those wage talks and what's happening there. Right, coming over, I'm going to go to some of the data before we get stuck into the ECB. Yesterday, bit of a surprise in the GDP numbers, not that it was too much of a price mover, but GDP final coming in at 3.3%, a big jump over the prior 2%. Don't often get a big change in the final numbers. What that does do is that sets 2023 GDP at 2.5% for 2023. That was up from 1.9% in 2022. So pretty good growth compared to what's happening elsewhere. Durable goods orders was out. Headline orders came in flat, but when you strip out the bits and bobs, it came in pretty good. Core durables up 0.6, excluding defence up 0.5. And the investment number there, capital goods orders, non-defence ex-air coming in at positive 3% as well. So pretty good numbers there. All soft landing numbers came in yesterday. Trade balance deficit narrowed a bit more. Good news there as well. Jobless claims a bit higher, but knocking around the 214s. Nothing to worry about. Continued claims a little bit worse than expected, but again we're knocking around old numbers, so nothing to see there. Inventory data as well came in at 0.4%, so inventory's having a little bit of a build there as well. The retail inventory is also building a bit as well. So all the data in the US still looking okay. Nothing to worry about, but we still got a case of dollar rallied, dollar got smacked, Kay, which has been a recurring theme now, hasn't it? When the dollar seems to rally on good data, it doesn't take long for the sellers to come in. Yeah.
Wow. I guess we are in the perfect definition of a range trading on the dollar, really. I think there's a bit of a fight going on, really, between what's going on the one hand, which is the bond market, and then the other hand, perhaps the equity market, and perhaps correlation algos are fighting each other a little bit, and spot FX traders are trapped a little in the middle. What I see are ranges, but the market hasn't given up on the dollar may get a slap later yet. And that really keeps it in ranges, because every time people try to sell dollars, then they get a series of better data around the neck, and it goes the other way. But it's still very much of a rangy market, right? Also tells me that the market, and I don't know whether it's the bigger players, the real money, are they on the sidelines right now and just waiting for those data to start to deteriorate to then slap the dollar around the neck? I'm not 100% sure. I didn't, and I must say that I'm sometimes talking to people who are still relatively close to the market, and there's not a lot that they really can tell me to light our poor retail traders lamp, because they say pretty much the same, that this market is first of all a little complicated, because a lot of correlations have gone out of the window, and then seemingly come back into play, and then be a bit destroyed again. So it's really not a it's not a very easy trade. And you know what, it brings me back to the fact that if you have doubts about the dollar market, and you have to look at the individual currencies, which one are affected by what, and which one can go where. And then, for instance, then you come back to one like the sterling, which are still seeing okay data. And I know we had those CBI numbers coming in worse, but then overnight we had a bit better data again. And well, exceptionalism is a big word, but if you look at sterling, is still doing a bit better. Then that reflects in the euro sterling, that reflects in stuff like sterling yen, for instance. And then if you look at those crosses also, they are still behaving relatively healthy, or as they should at times. So, but the dollar is to me as well is a pretty difficult animal right now. But if you dare to trade ranges, you're doing pretty okay, right?
Yeah, exactly. And there's plenty of it going on, and we've been saying it all the time. You know, you get a data move. If it doesn't break a level, part of a range, you know what you should be doing with it. Trying to trade a revision back to the medium, shall we say, or the average of what that range has been. We keep coming back to the middle of ranges, and while that remains the case, that's maybe how we should be looking to trade it and whatnot. Couple of bits of data there. Canada average weekly earnings year on year ticking up a bit. So a bit of wage pressure coming in there, though a bit soggy on the manufacturing sales. No, manufacturing isn't doing a whole lot of good there and elsewhere. We had the 7-year bond sale going off. Went off pretty well as far as I can see. We had a bid to cover 2.57 versus a previous 2.5. So better there, though there was a bit of a mix around in the directs and indirects accepted. Not too much difference on the high yield rate and the well issued rate. A couple of pips missing there. Kay, that one went by pretty much okay, that auction.
Smoothly.
Sorry?
Yeah, smoothly. Yeah, smoothly. Nothing really to comment too much about it. That one was a lot smoother. Wow, bit of a little wave once the results came out, because the market was perhaps a little worried about it after the fives. Then the dollar got not just that little bit when the result came out, but then usual business as usual came back, and not really had a long-term impact. As I said, I think for the bond market, apart from the data, of course, because we will have some today, I think that we're going to have to look at Monday and Wednesday, when the Treasury announces their plans for the next lot of bond auctions.
Yeah. Right, a couple of other bits, and we get stuck into the ECB jobs watch, Salesforce, next lot to be laying off. They're looking to get shot of 700 workers. James popping up with some football news there.
You're joking, James. Yeah.
Just what we need. Yeah. Wow. Leave at the end of the season. Maybe we'll put in a bid for him. Anyway, back to the work stuff. On the geopolitical front, Putin is apparently, according to sources, said to signal to the US that he's open to talks on Ukraine. We'll see if that brings any sort of resolution. I wonder if China has been maybe squeaking in his ear hole. The reason I say that is that there was some headlines out earlier this week about the US potentially pressing China to issue some comments over the Iran stuff and the Houthi attacks in the Red Sea. Reuters report that China has spoken to Iran and asked them to rein in the Houthi attacks in the Red Sea. So we've been mentioning about China maybe needing to step things up on the international stage. Maybe they are doing just that. As I say, whispering in Putin's ear and now whispering in Iran's ear. Hopefully that's all good news and it leads to resolutions of both those situations. That will also be a positive for risk, and it may be a positive for China in its efforts to get out the mire it's in at the moment. So headlines to keep an eye on. We've got a bit of a spat with Canada, us here in the UK. The trade negotiations on a full trade deal had been paused. We had a rollover deal since Brexit that basically mirrored what Canada was getting from when we were part of the EU. That is coming to an end, so it has to be renegotiated. But apparently we're not allowing their hormone-injected meat to become part of the trade deal, and so therefore the deal is paused, which is throwing a load of cheese makers into disarray here in the UK and luxury car producers as well, because Canada is a big market for both of those. So a bit of a bun fight going on there for the UK. Not that it's really impacting anything at the moment, although Canada is, I think, third or fourth biggest export market. So it's no small potatoes on that one. ECB, here we go. The floodgates are open on all the squawkers. They kept rates unchanged, no change or anything in that. Rate level must be maintained for sufficiently long. They are to set rate restrictive policy as long as needed. The declining trend in underlying inflation has continued. It was, as expected, a pretty boring meeting and press conference. Those journos really need to up their game, I tell you. I think we spent more time taking the mick out of what went on during the event than actually reporting any news. I actually didn't report a single headline from Lagarde yesterday because nothing was worth it. Anyway, she said the economy is likely to have stagnated in Q4. The consensus at the table was that it was premature to talk about rate cuts, so there was expected pushback. She stands by her previous comments on rates. She said that wage growth is directionally good. And we need to be further along in the disinflation process before we are confident about hitting the target. Was questioned about the recent data and said that the PMI was a small signal, or the PMIs was a small signal that recovery conditions are coming into place, obviously based on some of those higher numbers in the PMIs. On the big question, the main question we were waiting for, i.e. who hates Lagarde, based on that survey that came out. She was quizzed on it and she came out with a load of old lawyer flannel talking about it was a technically sound survey. 80% of people did this and 70% of people did that, and a complete load of waffle. The end of it being that the overwhelming majority of staff say they are happy to work at the ECB. We'll brush off on that one. Money markets, right after the decision and the statement, upped their pricing of rate cuts to 140 BPs for 2024 from 130 BPs. Then further during the statement, they moved all their cut expectations from March to April, which is now an 80% chance of the first cut. It was 60% before the statement. And now we're pricing fully 50 basis points of cuts by June. So market's still a little bit more optimistic than what ECB members are saying. Then we got the sources piece, the usual sources piece there later in the afternoon, which said that policymakers are open to start discussing future rate cuts in March. That's discussing in March, if the data points to inflation hitting 2% this year, and that a March pivot would pave the way for a rate cut most likely in June, which is and about where our expectations are on my own are certainly. I'll go through the ECB heads that have come dashing out this morning. Kazakh's rates should start to go down barring any shocks, but it would be worse to be premature on rate cuts. Muller said it's still too early to discuss rate cuts. Wojcik said there was no dovish tilt yesterday. It's possible to cut later, but with bigger cuts, although he prefers 25 pip cuts. Simkus says it's still less optimistic. He's still less optimistic than markets on cuts, confident that the data won't support a cut in March and that patience is needed in setting monetary policy and decisions must be based on data, not dates. Come on, Kay, what was exciting in the ECB?
Well, she did reply to the question about herself, right? Saying that she was irrelevant.
Oh yeah, that was the biggest line. That was
Yeah.
probably the smartest thing she said since she got the job.
Yeah, the rest was yeah, lawyer's babble. My biggest take was that she, not specifically in the words, but in the tone compared to what she did or said from December into Davos, the tone was a little more less fighting back against early rate cuts. And I guess that's how the market understood it as well. We saw the euro crosses coming under pressure. We saw the euro dollar coming under pressure. That's how we read it. So it's not a complete pivot. It's not as hard as Powell's pivot in December, but there are those signs. And she was pretty, how should I say, vocal on the risks. Yeah, she said those little possible green shoots, but she was still. I think she was a little more dovish than she was before. I mean, without the undovish, unhawkish thing, you know. But where she was hawkish before, she was unhawkish this time, and that's what the market reacted upon. In the meantime, we are gradually undoing everything that happened on the ECB. Yeah, that's really about it, and that's what I said yesterday. The surprise trade will be when she's a little less hawkish than she was on until Davos, and that's what we've got. And that's really the lesson. The only thing that I've heard on there. Is it changing the face of the world? No. Are the hawks still going to fight against early cut calls? Yeah. But when you look at the data, and again this morning we had the German consumer climate data. They are still not good, and I don't know where she saw really the green shoots in the PMIs that we got. Yeah, I mean, manufacturing just that little bit, but still well below 50. Balance not great either. That's what I said. So to me, still Europe could be a bit underperforming the rest when it comes to trading on the back of what she said and just the data.
Yeah, thanks, mate. So on we go, and now I'm going to do another count this month to see how many ECB scorecards come out. It was 18 last time, although they came out multiple times. But the message is still the same: push against early cuts, and we'll see what happens in the summer. Right, Ali, what are you up to today, my friend? You were long dollar yen. You took some off, close 70%. Tried to ride it a bit further. Now we're back down below. Should you manually close it? You need to protect the 70. If you made money on the 70%, you need to protect that 70%, is what I would do. So if your 147.37 stop loss undoes all that profit, then you perhaps need to think about that and maybe get your stop up closer to entry so you can protect some of that. Even if you give a bit back because you want to stay in the trade, at least the worst that you come out of the trade is with some money in your pocket, which is the ultimate aim. I'd rather make a little than lose the full lot. So that's what you need to decide with that, as to whether you want to stay in or get out or move your stop up a bit and protect what you have made. Your Aussie dollar short, it's stuck around, isn't it? It's not moving anywhere really. You've had your chances to take some profit. So you've added a bit more, you're still in, taking some profit, good stuff. If you're doing that, a bit of jobbing around, sell the resistance, buy it on dips, looks good. So yeah, doing well on that. Good luck to you, mate. It's the thing with trading, as I say often, everything is a contradiction. You know, you can do the slice and dice strategy, but when you get into a situation like you have where it hasn't kicked on, that's when you've got to, as I say, learn how to manage when it doesn't go right or when it's not going as right as you expect it to. Then it becomes a case of, as I say, protecting the profit you've made, getting your stop up as quick as possible or down as quick as possible to protect. Getting everything to zero is the first step. Then you work to get it to maximize the profits. Sometimes it'll work, sometimes it won't. But what you may end up doing is turning some of those losers into break evens or smaller profits. And you know, the less you lose, the greater it is, and the more chance you have of making it. So keep going, mate. It's a never-ending process, learning, and it won't go right all the time, but it might just go less wrong than it has been previously. Right, what we got going on today? Euro dollar.
Brian,
oh, look at that. Yes, mate.
Brian, before we look at the prices, what's coming up there for the PCE this afternoon and the personal income and stuff?
Yeah, let's have a
We've
look.
had those pretty decent data yesterday. I've said in the room, I think there's a little bit of a risk here because those Q4 data, they may have seen the better leg of all those data in the first part of Q4, and these are December data. And I was saying in the room, to me, there's a small, of course, they could beat and everything, or just come out as expected as well. And then we should see a pretty decent, I guess, afternoon for risk again. But isn't there a bit of a risk, you would say, that since those are December numbers, that it may undershoot just a little bit, and then the dollar giving back what it's made yesterday?
I'll tell you what, it's difficult. I always have raise this point when we get PCE monthly numbers after a GDP number that it includes that PCE, should include that PCE number. I never know whether it's in it or not. I mean, given that PCE yesterday went up. Let me just check that it did go up. Where am I looking? Where are we? Up here. So PCE came down, but I think the core PCE stayed up pretty high, didn't it? There. So it stayed unchanged. The core PCE stayed unchanged at 2%. So, yeah, maybe you're right. I mean, this number, what we're expecting PCE unchanged. It's all difficult how they average it and calculate it into the annualized numbers for whatever. So we're expecting PC to come in unchanged. So maybe based on that number yesterday, there's a chance that it comes down. It depends what they estimated in the Q4 data for December. But as I say, I never know whether these numbers are already known by the people who compile the Q4 data and whether it's already in there. So, yeah, maybe seeing that 1.7% in PCE means that we might get a bit of a softer number. I think we've got to take it more in terms of what we saw from the inflation numbers. So if there's a divergence from those, from the main CPI data that we got, if there's a big divergence from that, because they were a bit more stickier. So we're expecting a drop in the core, unchanged on the PCE. If they come in higher, that will more fall into what we saw from the CPI data. And then we're going to see the dollar probably running higher again on the higher for longer message, and then probably get a whack. But overall, I'm always confused at this.
That's
this period.
I'm the same. I'm actually the same, and And you know what? I mean, in the past, we tend perhaps to overreact a little bit because and I think they do usually come out on a Friday, right? And the market goes a little bit balloony on them. But I would also say that keep a close eye on what personal income and spending does, because the consumer is one of the pillars, and that is still what the Fed is going to look at as well, right? So just keep an eye on those personal data as well, right? Not only
Yeah.
prices and stuff.
Yeah, thanks, mate. James has just put up that apparently the Kremlin has denied the Bloomberg report that Putin is putting out feelers. So back to square one in that one. Oh, typical Bloomberg by the looks of things, looking to try and get a risk rally in markets. I'm not saying anything more. Right, so euro dollar. Well, look, here we are again. 1 minute we're looking like we head into 107, and the next minute we're looking like we're heading back to 109. So we're still pinging around in between this sort of 110, 107 areas, the wider range, shall we say. But we are in a bit of a shallow downtrend at the moment. So, you know, we are coming down. We are making lower lows. We are setting lower highs. So, you know, this is bleeding lower very slowly. And it's happy to show that it will rally on bounces as well. Still messing about with this zone. As you can see, we get in it, we get out of it, we hold below it, we hold above it, we stay in it. So it's really just what you want to see is definitive price action, like up here where, you know, we hold above it and then we get the bounces. So if we start holding below this 30 area, then we probably get more of a push down to 108s or even more. If it starts holding below there, it keeps the trend going, and then the picture looks a bit more bearish, and maybe we go and have a look at stuff with a 107 handle on it, and maybe a move down to the big 107 area. And again, maybe for a bit of a range play on this one. But yeah, definitive trend is still edging down. So the trend is your friend, even while we're in bits of ranges. Dollar yen, bang in the middle, still highs in the 148s, lows in the 147s, just a dip below. I said watch out to see if we get another test of the 147 and how it would react. And we got down to, where was that? 08 before we got the bounce. So 107 has now likely become a level again after we had this little washout. So 60 pips, big data to come. Keep an eye on that one. If we test it and hold over the data, if the data's really soft, then again, we'll probably at some point revert back to the middle. So I'll be looking at that sort of area, maybe for a bit of a data counter trade, depending on what it is. S&P I wanted to look at quickly, and I'm looking at the clock, then I'll hand it over to K-Man. So still ongoing, watching this price action, seeing what develops up here. People still waiting for a move through to see if that fib extension gets tested. But in the meantime, you need to know what's happening if we don't even go there. So I put in our chat room yesterday, just following what's happening. We had this high. I wanted to know if this high got broken or tested again and how it got tested. I said there was two possibilities. One, that would get to somewhere like the 90s and it would hold there, because those short up here would start protecting those positions from about 90. We hovered at 90 for a bit, but then 4,900 became the level that the protection came in at. Down below, similar story. We have this support area here, just coming off of this zone here that I was watching as we broke up above that 48, 10, 20 area. Confirmed the support straight after. You can just about see there. Let's zoom it in a bit. So straight after the break, we got that confirmation support. Then later on, more support. Then we've seen a bit of a step up as well. So buyers here are protecting around about the 70 area. So now we've got a bit of an intra range coming in now between the lows and the highs. What that tells me is that if we break these areas, that's when we're likely to get a more significant move. So if we get under here, break that level, everyone who's long here and long here are going to have some stops under here. So if we break, we could have a further push back down that might be a bit more meaty than what we've seen just in this price action. Same on the top, break above here, there's probably some short-term stops sitting through 49.05, 10, somewhere like that. Get those, and then we're going to push on again, and that will keep the momentum going. So for now, if you're trading this one and wanting to know what's going on, watch the price action. These are all little lines, and I'll probably pull them off at some point unless they develop into something more significant over time. It's all about the clock and how these levels show up. Now, I'm long, so this is what I'm watching all day, every day. If we break higher, fine, I'll keep my longs, and off we go probably to another phase, another leg higher. If we come up here and test this again and we can't get through, maybe over the session, rest of the day, I might think about taking more of my longs off, because the price action will be telling me for a sustained period we're not managing to break to new ground. So that's my alarm bell starts ringing, take some more profit off the table. Same on the downside. If we start breaking down through this support, that'll tell me this top is going to become even more solid. We're likely to have a steeper pullback, so maybe take a bit more off there, tighten my stop up a bit more, although I've got my stop at 25 at the moment, and then just protect what I've got. So this price action is what I use to trade and manage my risk, manage my trades. Hence why I've been trying to give a bit of a lesson in watching this, watching how the markets develop. All our technical analysis that we use is based on history of price action. Well, here's history happening right in front of your eyes. So learn to use it, learn how you can use it to manage your trades, rather than waiting until 6 months later when you'll draw a fib on this and go, oh yeah, that's a level. Well, here's the level developing right here and now. Watch it, learn it. Kay, do you want to take it over since I've been waffling on for so long?
Yeah, mate, I can show a few things. Oh, right. Aussie is probably developing something interesting. I'm not going to go into the discussion that I'm currently having with Bubble Boy in our trading room, but I've been talking about this level here, this 66, call it 66.10, 66.20 zone. This is one that I'm going to watch today, especially, and I'm not saying those numbers are going to be worse today, but if we get, let's say, slight misses or misses that are good enough to send the dollar a bit lower, risk rebounding, not like disastrous number, which I don't think after those numbers yesterday, but just like small misses which will weigh on the dollar and send risk higher. I think this one could try and break free. That's the Aussie dollar, and probably go up into those mid 66s. I'm going to keep a close eye on those ones. On the other side of the spectrum, and I think there's perhaps a little bit, as I showed in the room, perhaps a little bit of this channel developing. The mud zone or the muddle zone where we are in right now is likely good enough to pick the direction for the afternoon on weaker US data. Perhaps have a look back at the 109, because the market is probably short a few euros because of Lagarde, because of the data, and getting put under a bit of pressure right now, because we are trading well above actually the Asian highs into that zone on the euro dollar. But this is one that I'm going to keep a close tab on if we get better or much better or better US data than expected, because looking at exactly what happened there and here, short-term shorts getting probably a little bit put under stress or even getting taken out for some. That could be one that then reverses again if the numbers are getting really, if the numbers are still very good out of the US. So those are two of them, and the other one is the cable. And cable is the other one where I'm going to look for, and I may have missed the opportunity because I was a little bit long yesterday. Around 20 and then around figure 5 on the cable, and I've sold euro dollar against it because I'm still short euro sterling, and I still like that one, to be honest. But the cable is the one that I'm looking at, same side as the Aussie, because I still think that sterling is doing pretty okay. Um, we had we have a bit of support also building up here. We haven't even been able to test that 126 again when the dollar was doing better. Cable is finding bits higher up. So this is one where either we are getting a bit weaker US data, and then it's, I guess, back to at least those highs, possibly into the 128s. Or if we get slightly better data and we get a little bit of a setback, a very interesting zone now, just 126.80 figure, that if we get a retest and hold again, then I'm looking at the same way. So there's two different approaches here. I'm keeping an open mind on what the data are going to do, but I am in the camp where, as I said before when I was talking about it with Ryan, where it's possible that those good data yesterday were for the earlier part of Q4. I'm just not saying it's going to happen this way. I'm just saying that I'm just ready for the eventuality that this could show. Um, I was talking with Blake about this as well, this dollar rand, and said, okay, this looks to be a really good zone. We are retesting it again, and do you know what? We are perhaps retesting it a bit too often for my liking. This 1879, 1880 zone, we are in there, and look what's waiting below here. If you would get slightly weaker data, which again would be relatively good for risk, probably, and then perhaps put a little bit of pressure on the dollar rand. We are on the 100 DMA. We are closing in on the 200 DMA. We are closing in on the 55 DMA, and the top end of the cloud is also around here. It's getting a little bit how shall I say, messy. If I put, I'm just going to quickly show it. It's around here, 1873 as well. The cloud. This is one where I think there's a bit of a risk if those US data undershoot, just undershoot mild enough to keep risk on the better side. Again, disastrous numbers. You may see equity markets plunge and the dollar actually go higher because it's risk off this afternoon. But you see this whole area here is quite important. If we see a break here, we could accelerate, right? So that's showing you two different sides of the coin. Swiss is, I'm trading that my option in the dollar Swiss, but it's a bit of a disappointment on the side of Swiss in general. We were hoping for the Swiss to trade weaker. I bought a few sterling Swiss as well, which I let go for a very minor bait back into the shark oceans of the Swiss franc. It's a bit disappointing, and I reckon Euro Swiss, especially after ECB, could make it back down to 93, low 93s perhaps, and the dollar Swiss is breaking that little channel we were trying to build from the year end. It's looking a bit fragile, this one, I must say. And we could finally get back to perhaps this closer to this 85 half three quarter zone if the US data disappoint. Okay, that's only if the US data disappoint. Otherwise, I still think in the more medium term to longer term, Swiss should weaken a bit, but it may just have to wait for a little bit. And in the meantime, I'm just trading around my option. I still got a few of the hedges on that I put on around here, and I'm actually in this zone here. I'm going to take the rest of the hedges off and then just be back long my call on the dollar Swiss. I don't know what to say on the yen really. The only thing I'm noticing, as we have already been talking about, are those yen crosses coming back up relatively easy all the time. We get those setbacks and then we're going back up. Same thing on the sterling yen, as Ryan already showed. And that's about it for me for now. We're through. We're through 85 and a half on 80, yeah, 85 and a half on the euro sterling, but it's a very, very slow grind lower. It's sterling is still doing better than the euro. Just shown the cable as well. Um, it's to me, it's just a leak, a slow leak lower. But the interesting thing, what I said yesterday as well, is that first we saw those 86.20s coming off it. Then we saw 85.90s coming in off it. Then we saw 85.60s coming in off it. And it would be an interesting retest, I think, of this 85 and a half zone to see if the same kind of pattern shows up again and just offers coming gradually down, because that would mean that it's probably still going to leak lower. I guess somebody is trying to accompany this lower, like selling here, buying back here, selling here, then selling here, buying back here, selling back here, and then we buy below 50, but we sell back in the 60s. It looks like a very gradual slow grind lower still to me. And Ryan, that's it for
Yeah,
me.
keep it on there, mate, because I said that the same, pretty much the same thing this morning. I'm surprised we didn't even get a test of 50 off that first bounce of 20s.
Mm,
But that's a bearish signal enough, and we can't now
yeah,
get through the 30s area, so we're not even
yeah.
getting back to 50. Yeah, personally, I think now we didn't get a test over the ECB. The ECB wasn't dovish, so I'm more inclined now to again think about trying longs off the 85 level purely
Mm-hmm.
because it's a big technical area. So yeah, see what happens. I think
Yeah,
it's might be a decent stretch point, a big range bottom for the
yeah.
move from the 87. So I'll have a go, but I won't marry the trade. If it still looks soft and
Mm.
we get through 84.80, then perhaps I'll flip it to short and see what happens.
Yeah,
But
if we get down there, mate, I'm going to take most of my shorts off. I've been trying to run this actually, yeah, mid December.
yeah,
And in various stages. I took most of them off when I saw this running to year end, and then I put them back on since it
yeah,
didn't go any higher in actually in the 86.20 zone, as the people know in the room. Been running
yeah.
it since, and it's a game of patience, I must say. It's not
Yeah, it's a
something
game of
not
chess.
something for
It's a game of chess.
it's a game for old guys. Um, no, but and also this one was what Simon actually pointed out in the room a few days ago, that if it's equal legs, we can again. It's pointing again at this 85, 84, 90. So I'm really going to take the best of mine off, then see what happens here. And same as you, if we start to break 84 and 90, 80, 90, then we may actually be on our way back to 83s here. It is possible, but okay, it's euro sterling and it's a sterling, and if numbers start to turn around in the UK, we know how emotional the market can be about the sterling. Look at this one, right? It can equally put in 2.5 or 3% higher if we see green shoots in the EU and the UK data start to deteriorate. So it's always we always have to be on the lookout when we are long sterling. It's a good currency to be in because we've got pretty high interest rates, but we have to be mindful that on any return of the data, sterling can get hit pretty hard as well. And with that, I'm going to wish you all guys a very safe and happy weekend. Thanks, Ryan. Back over to you, my friend. Oops, right. Oh, maybe he had to run off. Let me.
No, I'm here. Sorry, mate. Sorry, mate.
Okay.
Yeah, I had my mute button on. Yeah, thanks for that, mate. I echo those sentiments. Have a great weekend, everybody. Thank you for coming and watching us here on the Flow Show. Don't forget to spread the word on the socials or whatever. Let everyone know that we're here. I hope you've had a good week's trading, and I hope you're learning from what we're trying to give you here. We will see you all next week. Oh, well, not me. I'm off Monday, so I'll leave you in Kay's capable hands. And have a great weekend, everybody. Thanks, K-Man, as usual, for all your stuff. We'll see you next week.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.